Gold prices have repeatedly been touching record highs in recent times. So too have silver rates. From a geoeconomic perspective, why is this happening? And importantly, if you're an investor, what should you be doing? Should you be shoring up silver for your portfolio, or should you stay loyal to the yellow metal? Hello and welcome back to Business Matters at the Hindu with me, K. Bharat Kumar. Gold prices rallied 2,700 rupees to touch a high of 1,18,900 rupees for 10 grams of gold in the national capital earlier this week, specifically on Tuesday. This is driven by high demand at a time gold is seen as a safe haven asset in times of geoeconomic and geopolitical uncertainty. Typically, when there's a lot of business uncertainty, investors tend to go to assets like gold, which are seen as a safe haven. Correlating with this trend, the Indian rupee has been seeing record lows against the US dollar, facing the brunt of the US's H-1B visa curbs. These curbs are bound to impact the fortunes of export-dependent Indian IT companies. Traders said that the steep decline of the rupee against the US dollar in recent times has added to the rally of the precious metal. So far in this year, gold prices have added 39,950 rupees per 10 gram or 50.6%, rallying from 78,950 per 10 grams on December 31st last year. Silver prices also skyrocketed by 3,220 to hit an all-time high of 1,39,600 per kg on Tuesday. One of the other reasons why prices of both these precious metals has been going up is because of the expectation that the US's Federal Reserve would continue to cut benchmark interest rates. So when interest rates are on a decline, the returns from financial instruments would be much lower and investors would start looking at other assets such as gold or silver, which at that point in time could give them better returns. An article by my colleagues in the data team in Business Line showed that silver's average annual return for the period between 2006 and 2025, that is at least till September 9th, is about 15.6%. This trend has been on the horizon for some time now. It's not something new. In fact, the economic survey, which was released in late January this year by the Office of the Chief Economic Advisor, the economic survey for 2024-25, indicated that the expectation is that gold prices would decline, but that silver prices would rise. Of course, gold has belied those expectations. It too has risen. Citing the World Bank's Commodity Markets Report for 2024, released in October, the economic survey pointed out that commodity prices were expected to decline about 5% in 2025 and close to 2% in 2026. We spoke to Harshal Baroth, Senior Consultant South Asia and Middle East in Metals Focus, and asked him 4 questions as to what is driving the trend of silver prices rising and what should investors do. Here's what he had to say. First off, what is driving this trend of silver prices going up? The silver price trend, he says, has broadly mirrored the trend in gold, although with a bit more volatility, with gold prices rising due to a mix of expansionary or loose monetary policies in the aftermath of the global financial crisis. Silver has also benefited. 2. Industrial demand is said to have spurred prices of silver in recent times. Which sectors have actually contributed to this trend? He says that the rise of the green economy, primarily through the development of photovoltaic cells, the automotive sector with its electric vehicles, as well as power grid infrastructure development, all of these have spurred the rise of prices in silver. He adds that in recent years, demand was also boosted by applications linked to artificial intelligence, which contributed to the growth in consumer electronics. He points out that electronics and electrical demand has continued to make record highs in recent years. We also asked him, silver's price performance, has been far more volatile than that of gold. Why has this been so? He acknowledges the fact that there had been volatility, and he attributes this to the fact that silver has a dual characteristic. It's both an industrial as well as a precious metal. And he says that the benefit that gold saw from central bank buying across the world, as well as increasing de-dollarization, these 2 factors did not help silver, which resulted in its relative underperformance. Now, point number 4. Silver, if you look at the average annual return over a 20-year period starting from 2006, you can say we talked about 15.6% as the annual return. But if you look at each of those years, silver has sometimes given positive results, given a positive return, but has also resulted in losses in 9 out of those 20 years, the steepest loss being 20% in 2014. So we asked Mr. Bharat whether he would recommend silver as having to constitute a certain percentage of a retail investor's portfolio. This is what he said. I believe having precious metals is essential to a portfolio given the hedge they provide against geopolitical and geoeconomic uncertainty. The extent of allocation to silver, however, should be purely based on risk appetite. He says those with a higher risk appetite should definitely have silver as part of their portfolio because this comes at a time when silver's returns, the outlook for silver price seems to be bullish, and many analysts are predicting that silver price performance would outdo that of gold over the longer term horizon. However, if your risk appetite is low, then gold should definitely constitute a greater percentage of the allocation for precious metals in your portfolio. Nowadays, precious metals are giving such consistent and higher than expected returns that some analysts are now recommending that gold or precious metals should constitute a higher portion of your portfolio than they would earlier. Morgan Stanley, for one, says that gold should constitute 20% of your portfolio. Earlier, the average analyst used to indicate that gold should constitute or account for about 5% of your portfolio, and the more conservative ones may have recommended 10%. But now, there are numbers such as 20% that are floating around. That brings us to the Did You Know section of our episode here. Did you know that formal mining of silver took place in 3000 BCE in Anatolia, in modern-day Turkey? Gold preceded the white metal by at least 1000 years and preceded even iron and copper. And here's the quiz question for this week. Between 1500 and 1800 AD, which three countries accounted for more than 85% of global silver production? And here's the answer to the question from the last episode. When did the first railroad in the US open for operation? The answer is the first railroad to be chartered and built was the Granite Railway of Massachusetts, which ran approximately 3 miles. This was in 1826. That's all we have for you folks in this episode. If you enjoyed what you saw, do not forget to like, share and subscribe. Until we meet again, have a wonderful time ahead.